If you've been paying any attention to the news, the number $600 has been all over. Currently, there was a proposal out there to require banks to report any bank account to the IRS that had $600 or more in transactions throughout a whole year, whether it's incoming or outgoing. So now, actually, that threshold, so new proposals out there, they nixed the $600. Now the proposal shows any bank account threshold of $10,000 instead of $600. So that's semi-good news for anybody that was not wanting their $600 bank account that doesn't have hardly anything in it reported to the IRS. Another key thing is wage earners have been exempt. So if you are a W-2 earner, you get Social Security, you get retirement income, and you don't have a small business, you're exempt. Your bank accounts are not going to be reported to the IRS under this new proposal that's out there. So another piece of good news. So let's talk about what would be reported to the IRS. What is in this proposal? At this point, this has just been released. It's just news. The American Bankers Association, they are still thinking this is going too far. In fact, the president, Rob Nichols of the American Bankers Association, he says even with the modifications announced today, this proposal still goes too far by forcing financial institutions to share with the IRS private financial data from millions of customers not suspected of cheating on their taxes. Because as a whole, they are looking for people that may be cheating on their taxes. That is the purpose that they are saying that is behind this reporting. So let's take a look and say, what information would the IRS actually get? So the revised proposal would require banks and other financial institutions to provide taxpayer account balance information to the IRS annually. So it's not like they're getting a report monthly. This would be an annual reporting. What the IRS gets from banks now, income-wise, is any bank account that earns over $10 for the whole year in interest income. The IRS knows that. So right now it's just earned income on a bank account, interest income that they get reported to. Under the new proposal, the IRS is going to get two numbers. They're going to get the total amounts of funds deposited into your account and the total amount of funds withdrawn from your account if you have inflows and outflows of $10,000 or more. So it's up from $600 up to $10,000, or from $600 to $10,000. So that's good news, but the proposal's still out there and it is focused on businesses. Individuals have been exempted. So if you're an individual that gets a W-2, but you also have a small business on the side, and that business brings in more than $10,000 or pays out more than $10,000, then that bank account is still going to get reported to the IRS. You may be asking, well, how is the IRS going to know the difference between whether I get a W-2 or whether this bank account is business? Well, when you go into a bank currently, they ask you, is this a personal checking account or is this a business checking account? So I'm guessing at this point, but that is probably how they're going to do this. If this ends up going through, is they're going to say, okay, any business account that you have tagged as a business, we want to know what is the total income that went in for the whole year? What is the total income that went out for the year? This also would include if you get loan money. So if you get a $100,000 loan to help start with your business or to buy a new piece of equipment, that automatically triggers you for reporting. How they're going to distinguish that, how they're going to use this in the future for auditing purposes, we have no idea at this point. So make sure you stay tuned. I'm sure obviously there's going to be more to come on this. So make sure that you like our video, subscribe to our channel so you know when we post a new video, and have a great day. Let's start that over. I meant to say whatsoever. Whatever.